Good morning, everybody. This is the Live Market Open for Friday, May 20th. It's a Friday, finally Friday. Hope everybody's doing well. As usual, today we'll cover recent developments in markets, charts and levels, when the next, less than 24 hours. And as usual, what we do on Friday, we will do a preview for next week's events. So the most important part, of course, of the show is your questions. So if you cannot see the chat box alongside the screen, please go to the address right here, tlk.io/fx3-forex-live-video. Okay, I'm Yohay Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX3, if I didn't say that. Okay, what did we have yesterday? Yesterday was the day after the Fed meeting minutes. What happened on Wednesday? The Fed went hawkish, which is not something that happens quite often, okay? The Fed talked about a rate hike in June. It mentioned the word June, the month of June, 6 times, and talked about the option of raising rates, okay? Yesterday, we had a follow-up on that. We had 2 Fed speakers. One was Stanley Fischer. Number 2 at the Fed, the vice chair. He did not say anything, basically. Anyway, the focus was on Bill Dudley. Number 3 at the Fed, the president of the New York Fed, which is Dov, close to Janet Yellen, and he played some tricks on us, okay? So first of all, he didn't say anything in the dollar weekend because, he didn't add anything hawkish. And then he said, the chances of a rate hike in June have risen significantly. And he talked more about July than about June. What's the advantage in July? That it's after the Brexit referendum. The disadvantage is that there's no press conference, okay? So he talked about that option. He didn't reflect the same hawkishness as the minutes. He did remain a bit more dovish, but he did move just a bit. What happened in markets following that, his speech? We did see some consolidation. So here's the euro-dollar chart. Yesterday, of course, as you can see here, the big fall under support at 112.50 came on the meeting minutes, and then we fell to even lower ground yesterday to around 111.80. Then we're seeing some consolidation around this line. So it sort of helped the dollar. It didn't push the dollar higher, but didn't weigh on the dollar either against the euro. Against the pound, more of the same, more consolidation. We'll talk about pound-specific events soon. Let's talk about that. Yesterday we had an excellent retail sales report from the UK, a beat on month over month, plus an upward revision, and the same for everything else. Excluding fuel, better than expected upward revision. Year over year, better than expected upward revision. This had a sort of a short-term impact. On the pound, as always, we have this lots of activity, but for a very short period of time. Let me try to zero in on this specific publication. That's right here. Yeah, this rise right here. Then we went back to previous ground. All in all, the pound remains strong. We had just this morning a fresh opinion poll coming out showing once again a significant lead for the Remain campaign in the Brexit referendum on June 23rd. So good morning, Fabian. Good morning, everybody. Anyway, but also in pound dollar, we're seeing consolidation. Okay, the pound is second only to the US dollar, thanks to favorable opinion polls this week regarding the EU referendum. The dollar remains the king. Anyway, we're seeing also here a trend of consolidation. Same goes for dollar yen. So dollar yen did make a move above 110, then dropped a bit below this line. Anyway, I would say that the result of all the moves yesterday is that this 110 level is more or less broken. But apart from that, the moves are quite limited. Also, dollar yen is consolidating again. What happened? Dudley did lean towards the hawkish camp, but didn't go the full way. He didn't give the dollar the extra boost, but didn't depress it either. Good morning, Siri. Good morning, Sinatra. Morning, everybody. What we are seeing, sort of a different trend is on commodity currencies. We are seeing them recover. Okay, so if dollar CAD went all the way, got closer to the next resistance line. Okay, yesterday I was talking about 130.80. We got closer to 131.70, and then we fell back down. So 130.80 is still some kind of support, followed by the very round number of 130, resistance 131.70. So here we are. We did see the Canadian dollar fall to deeper lows, but recover. Of course, that's always related to oil prices. Boom, a recovery in oil prices, better mood in markets, back to $49. Some are skeptical, saying this move is a bit exaggerated. Also, that's my suspicion as well. I suspect that with higher oil prices, we'll see higher supply from the United States of America, from the shale industry. The drop in production already slowed down, and we could see it turn around once again. But anyway, at the moment, oil prices are high. This is, of course, supportive. This supports the Canadian dollar. Australian dollar also here. We fell to deeper lows around 71.80, and we managed to recover once again. The veteran line of 72.20 works once again as a separator of ranges. Although, well, I would also look at 72.40 as a line to watch out for. Okay, now we're currently in this sort of narrow range. Significant resistance at 73. We've seen how this line, how the pair attempted to make a break above this line and was rejected, and then fell to lower ground. Let's perhaps add a support line right here at 71.75. Anyway, we are seeing also recovery on the Aussie dollar. Same goes for Kiwi. We had a drop under, where are those lines missing here? We had a drop under 67.20. 67.20 was the bottom of the range. I see this move as a false break. We're back to the range. 67.67, very nice number at the moment. 68.40 works as resistance. Okay, so we're still at the lower end of the range for the Kiwi, but maintaining the range, not falling lower. So what's going on in markets in general is consolidation of the US dollar against major pairs, against major currencies, the euro, the pound, the yen, and some retreat against commodity currencies. Okay, let's talk about other currency pairs and then talk about other events we had yesterday. Good morning, Ramon, as well. Morning, everybody. Bon dia. For those that don't know, bon dia is good day in Catalan. Okay. Yeah, crude has hit your target quite fast. Yeah. Dollar Swiss 99.13 is the current level. The Swiss franc does reflect the US dollar strength, further strength for the US dollar that began on Wednesday and continues along the way. We've surpassed the round number here of well, sort of 98. 80, 99. The next level is a clear line of resistance. That's the line of parity. On the downside, we have 98.50 and 98. Euro Swiss also moving higher. Is the Swiss National Bank behind the move? I always have this suspicion, but at the moment, 111.16, the highest level in quite some time. Let me zoom out even further to see when was the last time we traded at this kind of level. Well, that was back in, well, February, not that long ago, but still a 3-month high for Euro Swiss. The range this morning is for Euro Swiss relatively significant, so we are seeing an uptrend here. The next line of resistance is 111.65, then 112, which was the peak back in February. Okay, and we're seeing this weakness of the Swiss franc, of course, also against dollar. Also against the dollar. Dollar Swiss also at the highest level as well. Here it's since March, so not that huge. Yeah, the level of parity is next. Euro pound. Euro pound continued. Well, this morning it's consolidating after quite a big move to the downside. So this consolidation brings it to the round number of 77 as we speak, just across this level right here. Let's update some lines here. So we have 76.50 as support. The next line of resistance to the upside, 77.40. And then followed by 78.30 and 79.30. All in all, it's been an excellent week for the pound, not only against the US dollar, but also against the euro and the yen. Just a winning streak of opinion polls that favor the Remain camp for the UK to stay in the European Union. The market likes it. Lots of short covering as well. Okay. Euro yen, here we are seeing lots of stability. Sort of the euro and the yen are trading in tandem against the US dollar. 123.70 is some kind of resistance up here, but a strong resistance. 124.40, I would say. Anyway, 123 is support. Pound yen is consolidating above the round number of 160. Okay, we made a very nice move to the upside, 160. On the downside, we still have 158.50 and 156.60. On the top side, 162.50 is resistance. So it's also been quite a week for the dragon, for the Geppy, whatever you want to call it. Lots of pips to be lost and to be made. And this has been an excellent week. Okay. Yeah, I see here a few questions. Yeah, talking about crude oil, I assume. So here we are at 45.88. That's a fib support. Okay, and Sirik is sharing a chart. Let's share it with everybody here in the video of Euro Swiss. Okay, moving to the upside. And you're asking, why do you think the Swiss franc is depreciating? My suspicion is that the Swiss National Bank is fighting against the weakness of the euro and sort of keeping up to speed, pushing the franc lower against the euro. Again, it's a suspicion. I don't know if they really intervened. We do know that they do intervene on a regular basis. They said it, they say it out loud. Okay, so it's no secret. Anyway, we're currently above 111, and 112 is strong resistance to the upside. I haven't heard any significant news coming out of Switzerland. So the franc and the yen, they don't move too much on indicators. It's not like the pound, the euro, the Aussie, the Kiwi, the CAD, well, most currencies in general. Okay. Anyway, that's our roundup of currency pairs for this morning. Well, at the moment, we're seeing the US dollar retreat a bit also against the euro. So it might be more than a consolidation, it might be some profit taking. Again, the bigger moves are against commodity currencies more than against major pairs. Okay. Yeah. Let's talk about other events we had yesterday. I mentioned retail sales smashing expectations. A small rise of 0.5 was expected. The actual figure was 1.3, almost triple the expectations. Plus, on top of an upward revision, I suspect that all this, the change of the date of Easter, last year it was in April, this year in March, caused all these revisions. Anyway, it also gave some support to the British pound. We had weak inflation figures on Tuesday, okay jobs report on Wednesday, and a great retail sales report on Thursday. So it's been an uptrend also in terms of indicators for the British pound. Yesterday, jobless claims in the US improved, 278,000. They dropped from the high of 294. So we can be a bit less worried about jobs. Perhaps it was really a one-off in the previous week. The Philly Fed manufacturing index went negative. That was below expectations, but after the New York, the Empire State Manufacturing Index missed earlier in the week. This wasn't such a huge surprise. Contrary to the FOMC meeting minutes, the ECB meeting minutes provided no news. Okay, it was a non-event. So nothing much to add about that. What do we have today on the agenda? We had the German PPI. It came out as expected. Let's just look at the actual number. Okay. So it came out earlier this morning. Oh, we also got final figures. Not much of a surprise here. Final GDP. No, why am I showing the wrong figures? Wait. Sorry, here we are. Producer price index. Well, almost as expected, 0.1 instead of 0.2. And the small year-over-year producer prices are minus 3.1%. Quite a big fall in producer prices, but again, the same figure like last month. Not a huge surprise. At 9 GMT, 11 here in the old continent, 10 in the UK, we have current account from the Eurozone. It's expected to be wide thanks to German exports mostly. Big surplus, not such a big impact. Then we have, then it's quite a busy day for Canadian figures. It's a double feature Friday in Canada. It's retail sales and inflation figures published at the same time. So we have retail sales headline figure expected to drop 0.7%, okay? And excluding cars, a drop of 0.5%. After rises last month, we're expecting falls. These are figures for the month of March. And for the month of April, we get inflation figures. They're more important because they shape the next movements of the Bank of Canada. So here we're looking year over year is more important. We're looking at a rise of 1.7 on the headline figure and 2% on core inflation. Inflation isn't doing that bad, mostly thanks to a weaker Canadian dollar earlier in the year that pushed inflation prices higher. It also helped Canadian exports. Okay, the Bank of Canada is in no rush to act. The situation is okay, and the focus now is on the government. Okay, the government introduced a new stimulus package. There's been also a debate on that in the Canadian Parliament this week, and they're ready to even go further with the budget deficit. It's a relatively new government led by Justin Trudeau and his finance minister, Monroe. I forgot his last name. Anyway, they're going for fiscal stimulus, something that might reach the old continent one day. Europe is still in austerity mode, but I think we're beginning to move away from that. Okay. Anyway, good morning, Luca. Good morning, everybody. Let's see. Next on, that's at 12:30 GMT. The Canadian indicators. Again, the Bank of Canada is in no rush to act. They're not happy with the stronger Canadian dollar, but the threshold, the bar for acting is quite high. Okay, at 1 GMT, we have a speech from Daniel Tarullo of the Fed. He is more responsible. I mean, he focuses on regulation, on community banking more than monetary policy. His speeches are usually a non-event, but perhaps, and he tends to be dovish. Let's see if he says anything about monetary policy, and he also talks about June or July. I wouldn't hold my breath for his speech. I would say the most important figure today comes from a figure that isn't usually the most important one. That's existing home sales. Most of the market in the United States, in most countries, and we're talking about buying and selling of homes, is of existing homes, second-hand ones. They trigger less economic activity, though, than new home sales. New home sales mean more infrastructure, such as roads, pipelines, schools, you name it. But as it's today, the last figure of the week, we had quite a turbulent week. It could sort of leave the last taste in the mouth, if you wish. And I mean, after we've seen the dollar rise and then consolidate, this could perhaps give us the last move of the week. A small rise from 5.33 million annualized to 5.4 is expected, a rise of 1.2%. Late, we have the Baker Hughes oil rig count. I wouldn't say it's that important because the number of rigs doesn't necessarily reflect the level of oil production. Level of oil production is seen we'll see it next week in the crude oil inventories. Okay, so that's the events for the week. I see we have some questions here. Yeah, so Syriac shares, pound dollar chart. They're saying it's A head and shoulders pattern. Yeah. So down, then up. Okay. So you're seeing potential for another fall before we see the pair rising once again. Yeah. Well, we could see some consolidation this morning. We are saying that, and then with more opinion polls, if the trend continues of opinion polls supporting the Remain campaign, we could there's more room to the upside. That's for sure. Think of selling at February high. Any thoughts? My thoughts is we might see some profit taking after a very good week for the pound, not only against the dollar but also against the euro and the yen, and that afterwards the trend could continue. Anyway, that's a nice chart, sort of stretching the boundaries of the trend. Yeah. BBB, good morning. You think that the bullish pound dollar is just a correction on the mixed data, justified upscale move? Think of sorry, I confused the people that writing the comments. Anyway, let's continue to the next question. I talked about the pound here. Surprised how well EM stocks, emerging market stocks, and the risk in general is reacting to the Fed. Delayed reaction next week. Yeah. Well, first of all, the Fed did disappoint us so many times. I mean, the Fed told us so many times that, I mean, let me rephrase. The Fed has been optimistic so many times. Talked about positive forecasts for growth, positive forecasts for raising rates. Remember the dot plot in December? That showed 4 rate hikes. Then they downgraded it to 2 rate hikes just in March, okay? Yellen does not miss an opportunity to show her dovish side, okay? What else do you need? I mean, how can markets believe that the Fed is really going strong? So we did see a reaction, but it wasn't huge. It was significant on Wednesday. And then markets were waiting for Dudley. Dudley did not provide the smoking gun, the clear evidence that also Yellen, also the chair, the Fed in general is on board for a rate hike in June, okay? He did sort of warm up towards the hawkish side, but he didn't go all the way, okay? The Fed, as we know, is data dependent. Lots of data points from now until the June decision. My tendency is that the Fed will refrain from rate hike in June because the Fed is looking for excuses not to rock the boat too much, not to kill the stock market. And it does have a real excuse. The uncertainty regarding the Brexit referendum. Remember this event, which was a political issue within the right wing. I mean, a problem for the Tory party in the UK turned into a global event because of this referendum, and because, well, it has been echoed by many leaders that such an event could destabilize the whole global economy, which is, of course, a bit of an exaggeration. But anyway, the Fed in its minutes, and also Dudley did mention this as a risk factor. Okay, more questions here. So I didn't answer your question, actually. So the question was about emerging market stocks. I think if we get more positive data and the markets will believe that a June hike is on the cards, we'll see more declines for emerging market stocks, Asian stocks in general. But markets are skeptical, and for good reasons. Okay. Sirk says there will not be a rate hike. They risk a world war. Well, world war would be a bit exaggerated, but they would risk. It's not in their DNA to. Their tendency is if there is doubt that if they fear that a rate hike could do some could rock the boat, they will refrain from that. I do see now. I'm also warming up towards the July option. Remember, I told you a few times that July is not an option because there's no press conference. What we heard from Dudley yesterday is that there is a real option. I believe my current analysis, and until the data shows us that it's better or worse, but if things remain the same, I believe that in June they'll tell us, okay, we're ready to hike in the next meeting. In June, they'll do what they did in October, tell us about the next meeting, and then in July, I mean, make it so obvious for markets that are going to hike in July, and then probably call a press conference as well in July and announce it. But there's still a good chance the data can disappoint and they'll push it back to December, or a very small chance the data will be so positive, again, I don't think it's realistic, that they'll hike before the Brexit referendum. My tendency now is July, but so many things can happen that I won't put my hand in the fire, as they say here in Spain. Okay, let's look again at chart. Oh, I see more questions here. Let's say minutes in June, it would be possible. Yeah, they mentioned the word June 6 times. That was, I mean, that's a hint that June is really a big option. I'm still not sure it's that big. Yeah, the UK is a little island, but very significant. Look, we're speaking English now. That's because of the British Empire. The sun never sets there. So, fish and chips monetary theory. Okay, let's see the Zurich shares here chart. DXI. Okay. Also here we're seeing a move to the downside, right? Or a potential move to the downside after some consolidation. So that's the, yeah, okay. Yeah, well, I still see a bit more room to the upside for the US dollar. But yeah, now it's in consolidation mode. Okay. Okay, they're talking between each other. It says, looks like a Falklands war coming again soon. Geology confirms billions of oil. Wow, go Argentina, yeah. Yeah, oil, with current prices of oil, I'm not sure it's worth risking and digging new offshore rigs. But if oil prices rise again, who knows? Okay, other comments are commenting with each other. In a few weeks' time, we have the European Championship in football. That means all the great teams in the world, except Argentina and Brazil. Well, I should mention also Uruguay, but maybe other countries. But anyway, go Argentina. We'll have to wait for the World Cup in 2 more years. Yeah, okay, let's take another look at markets. Okay, we're talking between each other. DXY setup. Apply pullback before higher target. Okay, if you're talking about Zurich's chart, let's put it on the video right here. And once again, so it'll be easier for you to comment on that. Anyway, yeah. Yeah, it's the Falkland Islands, called Malvinas in Spanish. Islands off the shore of Argentina. Well, a bit far actually into the Atlantic, into the South Atlantic Sea, South Atlantic Ocean, I should say. Was a war fought there in the early 80s, and this war brought the end of the dictatorship in Argentina. Here it is. Okay. Not that close to Argentina, anyway. Okay, back to our main topics. Small pullback on dollar index. Yeah, I think what we're seeing now is kind of a pullback. We're seeing dollar index, remind you once again, it's mostly the euro because of historic reasons, because trade with Europe was much more significant when the index was built many years ago. Now, of course, Asia takes a much more significant share of global trade. Yeah. Anyway, euro dollar is moving a bit to the upside. 112.50 is resistance, 111.80 perhaps support. We should perhaps adjust the lines right here. The same, well, pound dollar is also consolidating. In general, what we're seeing this morning is some profit taking. The pound had an excellent week, and now it's retreating. The dollar had a great week, now it's retreating. Yeah, that's what we're seeing now. Okay, any more questions? Yeah. Mentioned that oil is moving higher. Now it's at the highest levels since here. That's October, so it's a 7-month high for black gold, as it's sometimes called. Let's add another line here to the upside. 51. Now, Goldman Sachs said this week that oil prices, that there's now a deficit in oil production, from a surplus to a deficit, from oversupply to overdemand. I'm not so sure about that, but never know. Yeah, Shirik says, I read today the 2 most important African oil exporting countries signed an agreement to sell their oil in yuan. The dawn of the petro yuan. If you could share that article with us, that'll be great. Nigeria is the biggest oil exporting country, as far as I know, in Africa, also a member of OPEC. Production disruptions in Nigeria have, in the past, pushed oil prices higher. And China is a huge investor in Africa. Lots of infrastructure projects are built by the world's second largest economy. So, yeah, so what you're saying certainly makes sense. But, I mean, looking to the future, the dollar is still the reserve currency of the world. Okay. Yeah. So sharing here, Angola, Nigeria, and Morocco are, okay, this is an article in Spanish. Let me translate that. I mean, the headline. Yeah, so it's Angola, Nigeria, and Morocco are closing agreements, key agreements with China for the petro yuan. This is an article by oroyfinanzas.com. Yeah. Let's see when it turns into reality. It's a swap agreement, at least between the central bank in Morocco and the central bank in China. As far as I know, oil prices are still in US dollars, also for these 3 countries, okay? Yeah, I also assume it's only oil they ship to China, and they agreed on bilateral swaps. Also, the Bank of England has a similar agreement with China and a few other central banks. But as far as I know, I mean, if there is trade in yuan and now it's becoming more significant, then but oil prices are still denominated in USD. Okay. Anyway, yesterday and also 2 days ago, we did sort of special segments in the show. Yesterday, levels on euro-dollar after the Fed, and 2 days ago, a preview for the Fed meeting minutes. Any feedback on that is, of course, welcome. Today, we will not have a special segment, just a regular preview. Well, that is the Friday special segment. Friday is a special day. Sirik says the dollar is a walking dead. Well, the dollar is in decline for quite some time, but at least in 2015, it's had its time in the sun. Well, since late 2014, rising on the end of QE, then gearing up the preparation for rate hike, and finally the rate hike. We know that the Fed is moving very, very, very slowly, but dollar is not fully dead. As I see it, the US dollar is still the cleanest shirt in the dirty pile. Here in Europe, situation isn't that great, and China did a lot to revive the global economy after 2008, but now it's suffering from a credit bubble. Japan is fighting deflation, and well, these are the main countries. Okay. Further questions, or perhaps we'll begin the wrap-up. And remember that after the wrap-up, we'll have the preview for next week. Okay. Let's get back to the hourly chart here. Oh, and before that, with one more thing as usual I want to show you. Let's refresh this. This is implied probability for a rate hike according to the CME Group FedWatch tool, also known, why doesn't it load now? Quite disappointing. Okay, no luck with that. Sorry. Anyway, we mentioned that after the Wednesday meeting minutes, we had higher chances of rate hike. And these are about, last time I looked, 70% against rate hike in June, but more or less 50-50 for July. Okay. Oh, before we move on, just another question from Luca on the Canadian dollar. So Luca shares with us a chart of dollar CAD, and you're saying that a retest of 130 is good for long in dollar CAD, target 133. Yeah, my level that I'm watching is 133.10. Beforehand, we have some kind of resistance at 131.70. But what we've seen this week is weakness, lots of weakness in the Canadian dollar. We've seen how the Canadian dollar weakens when oil prices fall and hardly rises when oil prices rise. This is a bearish sign for the Canadian dollar, or if you wish, a bullish sign for dollar CAD. Okay, so the Bank of Canada would also like to see a weaker Canadian dollar. Remember that while oil prices are rising, one of the reasons for the rise is wildfires in Alberta in Canada and the loss of production from Canada. So it doesn't really help Canada that prices are higher when it cannot export its oil, or a significant portion of its oil, estimated up to 1 million barrels per day. Okay. So this is the wrap-up for the live market open for May 20th. Happy Friday. We're seeing a trend of consolidation. The big event that we had yesterday that triggered this consolidation is a speech by Dovish Dudley, the president of the New York Fed number 3 there. He is warming up to the hawkish camp, seeing higher chances of a June rate hike, but talks about July as being more likely. So he took one step closer to the hawkish camp, didn't remain in his dovish self, but didn't also move to the far end of, he didn't reflect the hawkishness of the minutes. This helps the dollar consolidate its gains, okay, across the board. Now we're seeing the dollar weakening a bit against the euro. 112.15 is the current level. Resistance, 112.50, 113.35. Support there at the low of 111.80 and then 111.50. Pound dollar, also the pound had an excellent weekend, and this morning it got yet another positive pull. Also, figures yesterday, retail sales in the UK were great, so cable went to higher levels. Now it's sliding back down, consolidating, correcting its gains. 145.70 support at 145, resistance there at 146.80. I would say dollar yen is hugging the 110 level, unsure where to go, also consolidating its gains. 111 used to be a line in the sand for the Bank of Japan, now it's resistance. 109.40 is support. Dollar CAD, we talked about that, support 130.80, resistance 131.70, further support at 130, very, very strong support at the round number of 130. Aussie dollar 72.37, continuing its rise. 72.40 was the low seen a few days ago. Strong resistance at 73, followed by 73.75. Support at 71.75. And the Kiwi dollar maintains its range, almost lost it, but maintained the 67.20 level, resistance at 68.40. Okay, in this wrap up, let's also mention that the Egypt Air story is still lurking in the background. The plane disappeared. The flight from Paris to Cairo disappeared, probably crashed, contradicting accounts of what happened, and the reasons might be terror, might be an accident. We'll maybe get more news today. Currently, no market impact. And the pound, even if it's now losing a bit of ground, it still enjoys positive opinion polls. We talked about the main event yesterday. Today, we have the current account in the Eurozone at 8 GMT, expected to be positive. A double feature for the Canadian dollar. So for those trading the loonie, seeing another move to the upside on dollar CAD, this is a double feature release, inflation and retail sales at the same time, 12:30 GMT. A speech by Daniel Tarullo of the Fed at 1 GMT. I don't expect any fireworks there. And last but not least, US existing home sales at 2 GMT. Not the most important figure, but because it has the last word today, it sort of could be of higher significance and would have, we had a week of dollar strength. Let's see if it extends the gains into the weekend or makes, we'll see more profit taking and more consolidation as we're seeing this morning. Okay, so that's the wrap up for today. Now let's begin the preview for next week. This is the preview for the week of May 23rd to May 27th. We can call it the penultimate week of May. Sell in May and go away, not so sure. Anyway, over the weekend, we have G7 meetings. They're probably going to do sort of a slap Japan on the wrist for intervening in markets. I don't expect anything huge, but perhaps we'll have some comments. In the past, they used to be more important meetings. On Monday, for those trading the euro dollar, the world's most important currency pair, we have the forward-looking PMIs, purchasing managers indexes. Most important one is the German manufacturing one. And we have more from Germany with the ZU figure. It's Germany's, I would say, #2 think tank, but it's released before the #1 think tank releases its figure. So it's also significant for the euro. We have US new home sales. Follow-up. Sales of new homes trigger more activity, making this figure more important than existing home sales. Well, usually things warm up on Wednesday. Another indicator, the #1 think tank in Germany, the IFO figure, a rate decision in Canada. So if we talk today about the Canadian dollar, this is an opportunity for the Bank of Canada to talk once again against the strength of the Canadian dollar if it remains strong, but if it retreats, I believe we'll not hear anything about that. The Bank of Canada could sort of say, okay, the government is now leading the charge and we're on the sidelines, but you never know. They might react to the weakness, potential weakness in the Canadian economy due to those wildfires. This should be an interesting event. And the big events come towards the end of the week. I mean, for the United States, the Fed said it's data dependent. So now we have the data. On Thursday, well, before that, we have UK GDP, the second release. And then we have durable goods orders. Durable goods orders, the core figure, it's for April, and reflects investment, very important for growth for the Fed. Speaking about growth, we have a revision of Q1 growth on Friday, and that also should have a significant impact. So we have a strong close for the week in terms of US figures. The June or no June, July or no July to hike or not to hike. Towards the end of the week, we could have significant moves in markets regarding that. Okay, so that's the preview for next week's big events. It should also be an interesting week. Okay, so before we go and enjoy the weekend, I see here a few more questions. Okay, Lucas off to work, enjoy. Lucas says, odd Kiwi, very interesting yesterday. Daily candle may have reached medium-term bottom. Okay, let's share this chart with everybody. Oh, I see. Yeah, that's a long-term trend line supporting Aussie Kiwi. One of the favorite crosses because usually they move in tandem, the antipodian currencies. And now, and of course, when they do separate, it provides opportunities on this cross. So this is quite a strong trend line. Thanks for sharing. Since November, the pair touched this line several times. Now makes another attempt. So yeah, may have reached a medium-term bottom, and from here we could rise. Yeah, what we've seen in Aussie Kiwi is mostly the fall of the Australian dollar. The Aussie dollar is 600 pips off the highs. The Kiwi is only something like 300 pips off the highs. So both currencies retreated against the US dollar, but the Aussie is certainly the weakest link because of the recent rate cut. And the Kiwi is looking stronger because the RBNZ did not follow through. No hints even of a rate cut. Okay, so thanks for sharing this chart. Luca says, Sirix says, nice look, Luca. Aussie certainly overextended to the short term. Anyway, yeah, it's a nice chart. So once again, thank you everybody for coming throughout the week. Thank you for all the great comments, the questions. Hope you had an exciting week with the US dollar. Hope we'll have another exciting week after a fun weekend, of course. Most of you, I guess, are here in the Northern Hemisphere, and it's a great season now to enjoy the weekend. So yeah, and any feedback, as I mentioned, to Mauricio, which is managing the live videos of FX Street. Any kind of feedback is welcome. And yeah, one more chart before we go off. Yeah. So Zurich shares, it's an odd Swiss one. Yeah, potential to the upside after the recent, well, the Swiss franc is weakening and so is the Aussie, but perhaps there's more room for weakening of the franc. Well, not a common cross, but perhaps interesting technical levels right here if we have a break to the upside. Okay, RSI looks to be changing direction. Okay, so thanks for sharing. I'm also glad that you're sharing things with each other. Having a community is great. And okay, so that's it. So I wish everybody a safe and successful trading day in markets. Happy weekend, as they say in French, bon weekend. I learned that recently. And see you on Monday. So that's it for today. Thank you and bye-bye.